Hello, hello. Okay, Andre Garcia, Lightning Loans once again. So in this video, we are talking about down payments. Okay, so a couple things that are of note regarding down payments, and then we're going to get into the minimum requirements for different types of programs. So of note, if you have cash, you're going to want to deposit that in the bank as soon as possible. You cannot bring cash to the closing table. All money for down, and this is for traditional loan programs. If you're going non-QM with a bank statement or a 1099 mortgage or one of the specialty programs, the rules are different. But if you're going conventional, if you're going VA, FHA, a traditional mortgage loan program, all down payment funds have to be sourced. Okay, and sourced means we have to figure out exactly where that money came from. And cash, you just can't, because cash could come from anywhere. Even if we have video of you receiving the cash, still not acceptable. You're going to have to deposit the money, because we cannot use that money until it's been deposited in the bank for 60 days. Okay, so you're going to want to get that. You're going to want to start that clock as soon as possible. Okay, now with regards to down payment assistance and the minimum requirements across different programs, we can get into this. If you're a first-time home buyer, now this is if you're a first-time home buyer and we're not going after any down payment assistance program, this is conventional wisdom. This is what I'm sure that you've heard, or maybe you haven't. If you're a first-time home buyer, minimum down 3%. Now, there are some ways to get around that 3%. You can actually finance up to 105% of the purchase price, but that is going to require additional qualifications, such as your income can only be so much. There's limitations with the programs that are up to 105%, but something that can be discussed, something that we can look into to see if you qualify. So typically, generally, first time home buyer across the board, minimum down, as long as if it's conventional or FHA, FHA is 3.5% down. For conventional, 3% down minimum. Okay. If you are not a first time home buyer, but if you're not a first time home buyer, but you are purchasing a primary residence, occupancy, the state of occupancy is very, very important. Meaning that, I mean, is it an investment property? Is it a second home? These things, that's very important. If you're buying another primary residence and you're not a first time home buyer, minimum down 5%. So if it's a $400,000 property, you got to come up with $20,000 plus closing costs. Okay. Now there are a few 0% or 100% financing programs. If you're a veteran, so VA loans do not require down payments. USDA loans, that's for rural. So it's a tricky word for me. That is for rural areas. So if you're in the middle of the state, away from major metro areas, minimum down 0% for the USDA program. If you think that you might qualify for USDA, there are maps and calculators and things to make sure that you're in a USDA eligible area, or that the property that you're looking at is in a USDA eligible area. So you're not going to be in Dade or Broward or Palm Beach or in Orlando or Tampa or St. Pete. You have to be like really in the middle of nowhere for it to be USDA eligible. But you can take a look at the map again. But all those programs are 0%. And the Home Possible, DPA stands for down payment assistance. So with down payment assistance programs, you very well could be 0% down. But even with down payment assistance programs, they generally require you to have 1 or 2% of your own money. Non-QM mortgages. So these are the specialty programs for entrepreneurs generally. If you're using bank statements, if you're using bank statements to prove income, if you're using 1099 to prove income, this is not a traditional loan program. This is considered non-QM. But non-QM is the new subprime mortgage, which I know may sound a little scary to some people, but it's nothing to worry about. It's just an alternative way to calculate your income in a way that reflects what you can actually afford, because sometimes we get a 1099 for $200,000 and we decide to write off $180,000 worth of expenses. And for conventional loans, for traditional loans, you have to use the income that you paid taxes on, as I went over in the income video. So bank statement loans, 1099 only mortgages, 10% down if your credit score is over 700. If you're close to 700, there's a decent chance that we might be able to get it pushed up 40, 50, 60, 70 points, depending on everything that's going on. That's not a guarantee. It will not work for everybody. But there are a few people, I would say about half of the people that are at 650, I could probably get them up to low sevens, 710, 720, something like that in 3 or 4 weeks, depending on what's going on in their credit report. But if you are going after the non-QM programs, 10% down if your credit score is over 700, but 15 to 20% down is going to make everybody feel a lot more comfortable, and you're going to have an easier time. But if 10% is all you got, let's try and make it happen. All right, I have no issues. If it's your second home, if it's a second home, 10 to 20% down, depending on credit, few other variables, 10 to 20% down. Okay, so 10, we might be able to get away with 10%. They might require you to have a little bit more. And sometimes what happens is that they'll say, yeah, minimum down is 10%, but then they'll make the minimum down really, really expensive, where it just makes more sense to jump up to the next level. So like, for example, they'll have a 10% option or a 15% option, but they'll have the 10% option, but to get the 10% option, you have to pay something like 4% extra or something like that. So it just makes absolutely no sense. So that's just the way that they do things. Sometimes I don't like it, but you know, it's just really, it's above my head. I just try to inform you as best as possible, let you know that that's something that may come up, but 10% down, and we're in the neighborhood. You know, we might be able to get the seller to contribute something towards the down payments. There's ways that, you know, there's ways that we can work the deal. Even if it's an investment property, you're going to want 20 to 25% down. For investment property, 20 to 25% down. Okay, that's what they're going to be looking for. And that's even be it a residential investment or a commercial investment. Residential is 1, 2, 3, 4 units is considered residential. If it's 5 units or more, that's considered commercial. Okay, and really across the board, 20 to 25% down, except for large commercial. If it's a large commercial apartment building, there is an 85% CLTV program that I have access to. So yes, yeah, you know, hopefully that gives you more information about down payments, the requirements, and so you can continue on with the calculator. All right, thank you very much.